All right, well, here we are, May 7th, 2021, the end of another week, the end of the first week of May. Chris, how you doing?
Doing great, Tom. How was your Cinco de Mayo?
Looking pretty snazzy there, and your cuffs up. Let me do that
little
too.
Casual,
All right, there we
little
go.
casual today. Yes,
Got
sir.
the cuff
Friday.
up today. Nice. So want to cover a couple of things here in this week's podcast. We'll obviously go through the markets and the news. But one of the things you and I were talking about was last week we were talking about sell in May and go away and why this may not be the year that the sell in May and go away could actually happen. But I was reading one of many articles out there about the roaring 20s. And are we getting into a 100-year cycle where the roaring 20s could be back? And so I want to cover that a little bit later in the podcast too. So, there's so much to talk about in our half an hour together. But let's start with the news. So you have been dissecting the family feud going on in Washington between Janet Yellen and Jerome Powell. So tell us about it.
Well, earlier this week, you had Janet Yellen come out and more or less not rebuff, but certainly fire a warning shot across the market's bow and maybe Jerome Powell's bow. She used to have his job, remember, saying that she's concerned about inflation, or she at least thinks that inflation may be affecting the market in the closer term than the later term here. And Jerome Powell and the rest of the Fed governors have been pretty steadfast in their opinion that this is a 2022, 2023 problem. Janet Yellen basically telling us, hey, 2021, start to expect it. And isn't that what the bond market's been telling us, Tom? I mean,
yeah, it has been. But didn't she, do the moonwalk backwards and try to step back a little bit, which is what I believe
she did
part of this week's kind of rebound in certain areas. Wasn't she kind of a net effect to that too?
She did indeed. But as you know, you really can't unsay those words. Remember taper tantrum, right? Taper tantrum, how the market kind of gets a hold of something like that, and it's like a rabid dog. This is one of those things that's going to be talked about, written about over the next couple of weeks. And you and I both know that inflation is here. I mean, look at the DBA, look at the DBC, look at anything that is an inflation adjusted or inflation sensitive type of security. Look at the tips. What's going on in the tips market right now? This is something that is a little closer. It's just, I think the market has said, it's that old thing of, well, we're starting at zero, so we can afford to go up. It's not the rate of increase, it's the level that's going to bother everybody. But I think when the market looks at it, the rate of increase is going to be a concern at some point, regardless if we're coming off of zero.
I did find it quite interesting, though, this week that, some of the there's some folks out there saying, some of the adages, it's 5 o'clock somewhere. This week we had Star Wars, May the 4th be with you. It was Cinco de Mayo this week. You look at some of the memes out there. 420 is an interesting number that comes up a lot, especially in the cannabis community. But there were some folks out there that threw some interesting things. It says 420. 420 is going to be the S&P high. Well, it's interesting that 420 this week held and stuck really well. And although we're not off of it that much, I guess time's going to tell to see whether or not that is going to be included in the history books. Maybe not for the entire year or years going forward, but for the month of May, perhaps. Who knows?
Possibly. Hey, so let me throw something out, because you just said 420, and there were some people out there proclaiming it Doge Day, and you and I have talked a lot about what's been going on with crypto, and Mr. Musk obviously comes to the tip of people's tongue, especially when you talk about Doge. He's going to be on Saturday Night Live this week, Tom.
Yeah.
You and I are both, we have contrarian blood running through our coursing through our investor minds. Man, Elon Musk on Saturday Night Live, and he's been tweeting about Dogecoin. Is this setting up? Doge has been going through the roof, to the moon, as they say. Is this setting up for a little bit of what we saw with Bitcoin and Coinbase?
Well, let me mention this real quick first. And I've said this before. I'm not a fan of Dogecoin. I'm getting my head handed to me by family members who are a fan of Dogecoin. I have a brother-in-law who owns it at a penny. And he went ahead and took some off the table because of that whole concern about buy the rumor, sell the news. Because you're right, Doge has just gone crazy. I think the high we saw earlier this week was 69 cents. It's kind of been all over the place. He decided to, against his judgment, which is all over the place, the fear and the greed, and they're all coming in. And I told him, look, take an emotional stance. If you're talking about this so much, then you need to take some of it off and take off the emotional steam. So he reduced his position a little bit in Doge, took some profits. Now he's probably going to complain to me if it goes to $1. It's going to be my fault that he did it, because everything's my fault in our family. But let me tell you something else, Chris. Last week we were on this program, and here we are this week in Ethereum, which is a coin I do believe in, up another 20% plus in a week. We weren't even in 3,000. 3,000 was the resistance level last week, and here we are. We sit, and we're now cracking the 3,600 area. We're knocking on that and pushing around. So, where's the projections lie in Ethereum? I said it last week. I'll say it again. Take a look at Bitcoin. Take a look at Ethereum. All right. Two, what I think very, very fundamental coins. One was the foundational coin. One was really the coin that ushered in. It's the coin of coins, because almost every cryptocurrency is minted off the ERC-25 platform, the Ethereum platform. So I believe Ethereum is a very valuable coin in the mix. If you take a look at the market caps on each of these, Bitcoin over $1 trillion. Ethereum is catching up. It was in the $100 million range, jumps to $2 billion. Now it's around $350 million. I mean, I believe down the road, it could be years from now. The way Ethereum's going, it could be months from now. I believe Ethereum is going to catch up and have the same market cap as Bitcoin. That would mean that if Bitcoin were to stay where it is right now, Ethereum would have to trade somewhere near $10,000 to be at the same market cap. I do think Bitcoin's going to rise, but I think Ethereum is the play, and Ethereum is going to make a much larger bounce to play catch up to the market cap of Bitcoin. So, what I believe we're seeing is just still the beginning stages of a huge rally in Ethereum, or Ether as it's called. Now, back to Dogecoin. Buy the rumor, sell the news. We're talking right now. We're going to go through the weekend. Saturday Night Live is going to happen. What is Dogecoin going to do after that event? I think it is going to pull back. I guess I'll find out whether my face is in mud or not next week. But, for those of you that are watching the podcast, what are your thoughts on Doge? What are your thoughts on cryptocurrency and the Saturday Night Live news event that everybody is looking forward to seeing? So, Chris, that's my thought on crypto. Any comments you want to add?
I think when we look at it, and I love your comments about Bitcoin versus Ethereum. Was listening with my eyes and my ears wide open and increased my position in Ethereum simply because I believe the same thing. I also noticed that that buzz that we saw around Coinbase has still just not lifted the haze off of Bitcoin. And wonder, I mean, that just every one of these public events, and we're lighthearted when we say buy the rumor, sell the news, or sell the fact. But is it truly, especially in these cases where you've got something that you can look at it and say, hey, we're getting to a point where you could say it's optimistic run over. It is it is, dare we say what Mr. Greenspan said way back when?
Yeah.
I mean, it truly is getting off the rails here. So keep that in mind for a second. And gold and silver. let's hit gold and silver because they're both making some breakouts right now. And
They
you and I
are.
have talked in the past, it was last summer, about is Bitcoin the new hedge for gold because Bitcoin's got growth acceptance going for it. And gold's kind of like, you're not going to walk around with bricks of gold. Gold and silver catching a bid right now is, and the dollar starting to reverse a little bit. Are we seeing a rotation of those people that have made so much money in some of the cryptos kind of starting to take a little favoring to physical gold and silver now?
Possibly. I mean, that's actually something we've discussed in our little family office meetings. And I said this last week. I've said it for a while now that I love when someone hates commodities. I love when the sentiment, especially in gold, had been when I started hearing people saying, gold is you can throw it away. This is not going to be an asset class. I mean, that's when I know when you start hearing negative comments on an asset and it stops going down, then most of the sellers have been flushed out. And I like that long-term piece. Yep. I added to my GLD positions, and obviously that was the right call. Let me just back up a second and talk about Coinbase because you brought it up. I own it, and you know what? Looks like Coinbase is going to be one of those long-term average down positions. But I do believe that, because I've seen Coinbase was 300 last week. We cracked the 250s. We were in the 250s here.
Yep.
And so I'm looking at maybe averaging down, buying in some more at the 250 mark. Maybe I'll sell puts at 250 to allow myself that obligation and at least get paid for it. But I do think that, Coinbase may be pulling back simply because it's not running up with crypto. But I do think, too, that when they come out, it's going to take a little time because they've already announced their Q1 earnings. They come out with their 2Q earnings. I think they might be a surprise because so many people are getting advertised about cryptocurrency. You hear about it so much, especially Ethereum. You can trade Ethereum on the Coinbase platform. Maybe Coinbase is going down because you cannot trade Doge on it or Doji. But I still think that, if we see Doji start to pull back a little bit and Ethereum continuing its run, I think that's going to be all but good news for Coinbase. Now, back to precious metals once again. Gold, I'm a long-term believer in, a long-term owner of. Silver, not so much. And I think it's because, to me, if you own one, you own both. But I might not be right on that one, Chris, because silver definitely is kind of the alpha dog in terms of if we do see a run up between these two metals, silver seems to be a much higher percentage move than gold in most cases. How do you see that?
Same thing, industrial. I mean, if you look at it, industrial uses of silver, if we've got an economy that continues to expand the way it is, inflationary pressures pushing up commodity prices across the board, silver has that little extra kicker or that bonus of being a little more industrialized than gold. And certainly gold's got its place when you talk about high tech, semiconductors, yada, yada, but that's more graphite now. I mean, when's graphite going to start being traded as a commodity, I guess is my question there.
Absolutely.
But if you look at it, silver's got that extra kicker of being kind of the old man's gold and the useful gold. It's not through the roof. Nobody's buying it for jewelry. Come on. So I think silver, I'm with you. True. Silver kind of gets that slingshot effect of industrial. Let me ask you one more question. Let's stick on the commodity side. And I've mentioned graphite kind of with a forked tongue here, but how about lithium? Clean energy's been getting smacked around. Tesla trading down now. NEO's been having some good news. They're down. And so lithium is more or less the commodity that I watch when it comes to these areas of the market. Whether it's solar panels, you need batteries on a solar panel. You need batteries for everything. At what point does lithium become a buy as a first touch for clean energy, for everything across the board? Because lithium usage going through the roof, but lithium prices in terms of these stocks are going down.
Yeah, well, I mean, you know what? You just brought up NEO, so let's just talk about it for a sec. Back in February, this thing was trading above 60. It had a good earnings report that came out at the end of February, and that caused a decrease in prices. It dropped all the way down to almost 40. Then we had the rebound.
Right.
Well, this time we had an earnings miss in NEO. And the stock reacted negatively. We're right back down around that. Well, we touched 40, but I mean, we're in the low 40s once again. If you like this play, Chris, as a longer term play, how do you trade it? You just pick it up at prices that you see here, or do you perhaps look at selling put options to try to grab a $40 price and get paid for it at the same time? What are your thoughts on how to trade a company like NEO?
I am with you on the put sell on a company like NEO. I look at this, and as you know, I'll swing immediately to the technicals and point out that, hey, you got the 50, 20, and 200-day moving averages trading all within each other. Remember, they just came out last week and said that their deliveries were up. They posted good numbers on deliveries. So it's not that this is dead on the table, per se, the stock, but
Right.
it is... it's in place for some a little bit of technical revitalization. When I look at it, you're only getting 6% on those 35s. If you're looking at the June 35s, 6% on a stock that's trading with the volatility as high as it is pretty low. I'd like to get paid a little more on that. So maybe the put sell is not a terrible, but keeping in mind that I'm going to be dollar cost averaging in on this.
I mean, you know what? You look at the 40s, for instance, the June 40s. They're trading in the mid twos right now, the low to mid $2 range. So I mean, you're getting I mean, this is for the June 18 options. You're getting a better than 5% payout for the 40s if you sell them. That puts you down around 30. Let's call it 37.5 to 38 as far as a break even. That's where you ultimately own the stock. If you were put the stock, it's not a bad place to be. If you believe in clean energy and you believe in this company. And the other thing I'm going to mention too, because we studied the implied volatilities of these, so we try to get an idea if the options are cheap or expensive. I love selling expensive premium. The time to have sold this expensive premium was a couple of days ago before the earnings came out, but that would have been eaten up a lot in price drop. So and the other thing I want to mention is that implied volatility, the options premiums right now on NEO are not exactly cheap by any means. They're pretty much right in the middle. So selling put premium on this, I will give it a B plus, because you're outside of earnings, so you're outside of one event that can take a stock up huge or down huge. So you're outside of that risk.
Correct.
But you still have some decent premium, which is, this thing should be selling, those puts should be selling for, my mind, 30% less, 30 to 40% less, just simply because the event's behind us. But because of that huge drop, it's actually still sticking. This time next week, that premium might be gone, but we'll bring it back up again next week and take a look at it. So
we will.
What else is on your radar that you like in clean stock, clean energy, that we could take a quick stab at?
Boy, you're trying to look at clean shirts or somewhat less clean shirts in the dirty hamper right now when you talk about anything in clean energy. Blink Holdings, though, BLNK, or Blink Charging rather, trading around $33. This is the third time it's touched down onto the 33 after bottoming at 28. They have been doing, and obviously you can start talking about infrastructure spending when you talk about Blink Charging, because they're going to be active in getting a lot of that infrastructure for the EVs out there. I like this one because it has turned into a little best in breed in terms of technical. It's leading the clean energy sector. It's doing better on a technical basis than the EV companies themselves. And you know what? Every time I open up briefing.com or Bloomberg, I see that they have signed yet another deal. They are raising money and they're putting it to good use. And the stock, even though it's off, I mean, it traded up at 64 in February, Tom. The stock is trading right now at $30, so it's down 50%. Now, I like this as one of the early gainers here.
Now, let me tell you this. Those options that are at the money with Blink are trading. I'm looking at this right now. They're trading about 15%. 15% of the stock price, roughly. So the reason why Blink is more expensive, the reason why Blink is more expensive than NEO puts is because their earnings are coming up next week. And so the
Yep.
cat's not out of the bag yet, and the inflated balloon we're going to call option prices is still blowing up. So keep in mind this one's gonna make a little jump here, and the option traders believe that based on what I'm seeing right now, is that you could see a 25% move in this stock after earnings one way or another. That's what I see as a possibility when you take a look at option premium around those near money options. Options traders are suggesting this stock is going to move somewhere around 8 points. It's going to have about an 8-point fluctuation.
Yep.
If you look 8 points up or 8 points down from where the stock is right now. And that's today. I mean, this might even become even more of a fever pitch come next week, right before those options come out. But if you believe in this company, which obviously, you make a good case here, Chris, then selling these put options, you're going to receive a much greater payday.
Right. And for those that don't understand, because there's a lot of people out there that have heard a lot about selling puts and all of that, go just one step deeper on the why those premiums. It comes down to that one word, uncertainty, right?
That's right.
So if you're buying those puts, or if you're the person that's selling them, I mean, explain to the people why those premiums are going to jump up right ahead of the earnings.
Well, what's going to happen is you're going to have both call buyers and put buyers are going to be bidding up those options. Call buyers are going to be bidding up simply because they're speculating a jump up in BLNK. Put buyers are going to be bidding up because of one of two reasons. Either they are speculating it's going to go down, or they're buying these options to hedge the stock that they may own. In either case, it's going to drive those prices up too. And then you've got arbitragers who are going to go in there and look and see if the calls are much more expensive than the puts or vice versa, and they're going to try to balance those out by ways of locking in a small gain. So all of this spells a higher put premium and higher call premium in terms of a percentage that we look at called implied volatility prior to those earnings coming out. So, Chris, I thought we'd spend the last few minutes talking about something a little more long-term. We had mentioned last week about sell in May and go away. And would there possibly be a reason that would not happen? Well, I've looked at several different articles, videos, research reports about what is being called the Roaring 20s, the return to the Roaring 20s. This is obviously a 100-year cycle, if you want to call it that. But for those of you that don't know, I'll give you a quick little history lesson. Back in 1918, we had the flu pandemic, the Great Influenza, as it was called. And what ended up happening because of the outcome of that pandemic, it's actually quite interesting. We have COVID right now that's out, that's continuing to push, different variants are pushing a rebirth of not only the virus, but deaths as well. Look at what's going on in India. It's heartbreaking. But at the same time, when you go back and you look at data, and you look at what happened in 1918, I mean, I did not know this until I started doing some research on it. But think about this. You look at COVID. COVID right now, I don't know the millions, the exact number, but if it's 3 million people worldwide, take a look at what happened in 1918 and 1919. There were roughly 100 million people that died from the Great Influenza, the big flu outbreak of 1918. And that was on a population, a global population that was 1/4 the size of what we have right now. So, I think we all know somebody that caught COVID. My daughter ended up getting it, and we're trying to figure out how. And what's more important is we're trying to figure out how we didn't get it. But anyway, everybody knows somebody. Almost everybody I know knows somebody that has COVID. But back in 1918, everybody knew people who died from influenza. And in most cases, everyone knew a lot of people who died. because there were just less people on the planet. And this thing ran through and killed a lot of people. And of course, we didn't have modern medicine like we do now. So I bring that up as a history lesson because it's not, what we want to talk about is not the actual numbers and what happened in both the pandemic then and what we see now, but the economic boom that came out of 2019, the Roaring Twenties, and draw some distinctions, some parallels, and of course some contrast to that. The parallels, first of all, is the government put in place a lot of economic stimulus packages back then, what they could, what they understood for. Back then, incomes went up. Back then, employment went up. Spending went up. But in some cases, not on the same level that we're seeing now. I mean, you see unemployment's up now off of the pandemic. Income is up, I want to say something like 20%. And part of that's because of the stimulus checks that have gone out too. But spending we've had the greatest spending in history. There's not been more spending that's happened in our lifetimes and going back since then. So that leads me to think that, as long as inflation is kept under check and as long as we don't just continue to throw money at every problem that's happening, and maybe even if we do continue to throw money and push, I think a lot of the reason why we're seeing the stock market hitting highs that it is now is just simply an arbitration of the fact that the dollar is cheaper than it was. So,
correct.
What are your thoughts on this, and what do you see happening long term?
Well, take it from the stimulus angle first, because that is what is first and foremost on everybody's mind. So you have the government that's getting ready to, first of all, they've already stymied us, as you mentioned, individually, or certain people have been stimulated, others have not. And that has helped the market out. We've read that's been well publicized, that we've seen a new breed of investors come in. You go down to the next level, and now it's stimulating the economy through infrastructure growth, which is the thing that's in front of Congress right now. And the way that they're going to pay for that is with taxes. So there's going to be this push-pull that we're going to see over the next year. And I think that's what's going to start to put the market into a little bit of maybe this isn't free money that's going to drive everything up. It's going to cost us something. Nonetheless, I don't think you can turn away from the fact that, as you had with the 20s, everybody wanted to just get back out, get to experiencing life again. Yeah. And I think that's an understated thing in this economy. When we look at it, you think everybody watches Carnival Cruise Line, right, Tom? Carnival Cruise Line and Royal Caribbean have turned into the canaries in the coal mine for the recovery trade. But
yeah, and I'm still trying to figure out how.
Yeah, there's so much more out there. I mean, just looking at the retailers, which cannot be stopped right now.
No, they can't.
Looking at...
And the big difference is that back 100 years ago, people came out of that pandemic saying, wow, I'm lucky to be alive.
Correct.
That's not the same thinking as someone boards an airplane now or someone's on a Carnival cruise. They're not thinking about why did I live? No, they're looking at this completely different because of we see the numbers every day, and it's crazy when you see 3 million plus people that have died from COVID. But when you look at sheer percentages of that on top of the number of people that live on this planet today, that's why you and I are boarding an airplane and we're saying, all right, put the mask on because chances are I'm going to be fine. And people are spending money because they've been pent up for a year. It's not because they're thinking I'm going to die tomorrow. It's because they're just tired of staying indoors. And I think a lot of that has to do with with that spending money. We're spending money. Yeah. The Gentile household is spending money. We want to get out. We want to, I can't wait till they open up international travel. I got a house over in New Zealand that is getting dusty because nobody's there. So I'm with you.
I was just about to make a kind of a point that I think is capturing this. And you mentioned, we feel like we're taking chances, but we're not. Last week you mentioned India, 350,000 people in one day. And then right after that, you brought up the number that matters, which is what is that as a percentage of their population? It sounds horrible to us, but 350,000, unfortunately, it's a healthcare system that is taxed already. And they're running out of things, as we saw happen here, but it's still a small number when you look at the grand scope of things. The thing that I wanted to point out that piggybacks on your international travel, Tom, you're familiar with the company Travel Zoo, I'm sure. It's publicly traded, TZOO. They are a discount travel broker. You get a top 20 list, I do every week, of trips so you can go here, there, everywhere. You can now buy trips to the Maldives with a private over-the-water bungalow for 2 people, including air travel, for $1,900. 3 meals a day, open bar for 2 hours a day, sitting over the water for a week. And the kicker is you don't have to make that travel until 2023.
Yeah.
If you want to say, how long can this go on, this get back out there?
Yeah. It's pay now and get entertained later. And I think it's a smart approach. And I think people that jump on that are going to be smart too, because these little, these big discounts, not little, but at all, big discounts, these are going to disappear, I think, within the next couple months, as things open up. And when you look at, and the other thing I look at is I look at how has the pandemic, coming out of the pandemic, COVID pandemic, when you look at sectors, and I got sectors on the screen right now, the financials have done really well. Everything's gone up, but when you look at industrials and you look at materials, and financials, those have done really well. But who's coming up really fast? Consumer discretionary. And retail and travel and these and for the longest time, myself included, I didn't want to invest in those sectors because I thought they were already overdone. I think they will be overdone once people are back back out there and enjoying themselves. And I think what's going to happen is you're going to see companies like airlines that are already scrambling for, they're let's open the middle seat. Let's knock off change fees. I'm seeing this stuff happening right now. But at the same time, they've added another level of service, which is a la carte, where you pay for everything except the trip to the restroom. And that'll probably be coming soon too. They'll have a coin operated stalls. But
don't give them any ideas.
but if they don't start to moderately raise their prices soon, then I think that certain areas of the travel industry will eventually start to fall apart a bit. But right now, it's all hands on deck in terms of stock prices going higher in these sectors.
Yeah, this feels like an annuity. You're going to make a lump sum investment into consumer discretionary, into travel companies, and they are going to pay you for the next 3. If you look at the Travel Zoo example, you can't tell me that somebody's going to, I'm thinking about buying that. If I drop the $1,800 to go between now and 2023, I can tell you the $1,800 is going to be a drop in the bucket compared to what I spend getting ready for that trip, traveling along that trip. It is a wise investment that these companies are making to discount it right now because it gets you and I back out there, and we're going to keep paying. We're going to keep putting money into that bucket. I think 2023, you bring up your roaring 20s, and I love that analogy. This goes out until 2023 or even later.
Yeah. So you got to think, as a trader, we can always think in terms of weeks and months. But as an investor, I think you really have to take a big, big look at this picture and put yourself out years. Because I do think it's going to be years before we start to really see any monster drawbacks. So,
absolutely.
Chris, always a pleasure. Thank you very much. Have a great weekend coming up, and we'll see you again same time next week.
We'll see you, Tom. Have a great one.
Bye, everyone.